We continue to observe that valuations are very stretched for the S&P 500 and the NASDAQ. Not as much for the Russell 2 or mid caps, but of course, we know that there are continuing to be challenges in those areas from pressure on balance sheets, pressure on income statements from economic growth. And you can see that there are really high bars for growth and recovery and earnings for things like the Russell 2000 into this year. And we've written a lot about this over the course of the last couple of years, have been an area of key disappointment. But the big question is that do these prior highs in valuations act as a ceiling? Do you see a new narrative of a new paradigm start to impact valuations in markets where we could see them press higher, or do we kind of run up against this wall where we hit a ceiling on valuations and the S&P 500 stalls out? When you add that valuation dynamic into the dynamic around earnings as well, is that analysts have cut their earnings estimates for 2025. We went into the year expecting double-digit earnings growth, or the street expected double-digit earnings growth. It's now been marked down to about 7%, but that's expected to recover to 14%. So what the conclusion of this is that there is a fair degree of optimism that's captured in current valuations as well as current earnings estimates, but there's not a lot of optimism that is captured in current positioning.